Welcome everyone, this is John Shealy at Trader Country Club. This is the daily market review for stock indexes for February 28th, 2022. We're first going to take a look at the futures for the E-mini S&P and notice that the open was in the lower part of the range, but it closed near the highs. It is still trying to move up because of as a general rule, I'd say there's always a bull bias, right? If it wasn't for the Russia invasion into Ukraine, this market would probably continue higher easily. However, it's still fighting back and forth because of the news. And so if Russia gets into a more area where they get into the capital and it creates more of a problem and they invade is more serious into the capital, then I could see that prices are going to try to move that back down. But obviously, the market's trying to realize that if Russia is slowing down, that if the army is not able to do much in regards to create and move through Ukraine, and that Europe is able to slow down the rush of the army, the military into Ukraine, then we could have a continued rally. I do admit, though, this is so dangerous right now. I wouldn't sell, obviously, a short position for the E-mini S&P. And in a little bit, we'll take a look at the spider. But I just think it's too nervous. This could be very well A, B, and a C and moves up in here and then finds out that the rate is going to be higher because of the Fed, and that may slow down the potential rally for a totally different reason. That it has nothing to do with Russia now, it involves in regards to the Fed action. So right now I'd stay out of the market. But I want to discuss this a little bit with the futures. Look where it opened and it moved down overnight, but then it began to rally in the morning at 9:30. Let's take a look at the price action in the spider, which is of course a ETF, and the hours of 9:30 and 4 o'clock. It's a very different chart, isn't it? Because now you're looking at the open at 9:30 is pretty close to the lows. So the price action most of the day was up. So it's important that if you're going to trade the market, I would say go ahead and pay for getting the futures in regards to your data. You need to know what's going on overnight in the futures. The E-mini S&P, the NASDAQ, the $5 Dow, and this gives you an idea of what to expect on the following day when the whole stock markets begins to open at 9:30 Eastern Standard. So it's really important. Let's take a look at one other little thing here. This is the 60-minute chart in the spider. And I'm talking about this is look how the price went to the lows on the 24th. And it opened at the low. But it wasn't the low in the futures. And it's really important. So here you're looking at prices started up at 9:30 on the 24th. Let's take a look at the futures for that same time period on the 24th. And you can see here, actually the selling was overnight, 3 o'clock, 4 o'clock, 10 o'clock. It wasn't until that the market had already rallied at 9:30. But take a look at this though. Notice how the spider had gone straight up. And you may realize, well, how would I really know on the open of the spider, maybe in a rally immediately? Well, here's why. Take at what the prices did in the futures. It moved into the 9:30 time period, and the market had already been at the lows of the futures. So in the futures, it already retested that price. It found support. So immediately 9:30, it started moving up. And so I would not know of the previous support that occurred overnight unless I looked at the futures. So it gave you an idea, why did I expect to see a possible bounce in the spider on the 24th? It was because in the futures, it was actually reaching a support area. Now, we would not have known that the market had just continued to rally up higher. But nonetheless, that's why it's important to know the futures. I can see that in regards to the futures, so that when I looked at the spider again at the 24th, it turned straight up. And it's because of the support that occurred in the futures E-mini S&P. All right. The other thing is, here your first hour, and it retested this area of resistance, and it came down. This is what I meant in regards, I really don't know what the market's going to do right now. It's trying to turn into a bull market. The reason you're seeing the white bars is because right now the confusion of the trend is getting these white bars is basically a warning. Sometimes it's a warning of a change back into a direction of a trend. But in this case, the white bars are telling me I'm not sure what prices are doing because of the algorithm that I use. All right, let's take a look at the other markets. We're taking a look at the triple Qs for the NASDAQ 100, and it's actually a rather small range. Just as before, the future had started with the finding support, so the market actually went up from the first hour, and it's moving up. However, because of the small range here, this could actually slow down the bullish momentum. It's all going to be based upon news, of course. What Russia does, what US does, what Europe does, we don't know. So at this particular time, right now, it all depends upon what Russia does in regards to whether or not they're able to take the capital of Ukraine. Lastly, we're taking a look at the Diamond, which is, of course, the ETF for the Dow Jones 30. And actually, it's the same price action. However, it's still down on the day. All I'm saying is I'm not sure what's going to do the next several days. So I would not trade the stock indexes at this particular time. It could go either way. It's all based upon news. This is John Shealy at Trader Country Club.